Hello and welcome back, guys. In today's video we're going to talk about what you should do if the stock market crashes to get financial freedom sooner. In this video we'll talk about how to make money fast with great dividend returns. We will be looking from a dividend investor's perspective, but growth investors could also use this concept. I think that everyone agrees that the stock market does not reflect how the companies are actually performing. It's important to remember that stock market in the short term reflects how the investors are voting, and in the long term reflects how the companies are performing. A lot of investors, like myself, are holding off from fully investing as we aren't finding great deals, and the ones that are around are few and hard to find. If you like this video and want to learn more about dividends, passive income, and the stock market, please subscribe. Also, if you could smash that like button, I'd greatly appreciate it. Finally, before we get into the video, I'd like to just say that I am not a financial advisor and to do your own research before investing. And with that out the way, let's get into the video. As you can see, the S&P has dropped off earlier in the week and then leveled itself out, and now it's continued to drop back down again. So what does this mean for us investors? Should we sell? Definitely not. As a dividend investor, I don't care so much about the price, but more about the dividend. The income that I get from the shares is what is the most important. As long as it doesn't go down, I don't care what happens to the stock price, as it means I can get better yields on my dividends. I have faith in the companies that I have invested into, and I'm sure they will recover. I'm investing in the long term, as I'm only young. I plan to hold my shares for at least 40 years. While the share price drops, I'll be waiting to invest in something I see good value. It's a great time to invest in the A-tier companies, as most of them are overpriced all the time. They are overpriced because you pay that bit more for the safety of the company and also the consistency they have with the dividend. Companies like Coca-Cola, Pepsi, Disneyland, although some people may disagree with me putting this company on the A-tier list, McDonald's, and lots of others. We're going to get into a little bit of maths here, but I'm sure that everyone will be able to follow along. McDonald's dropped to a price of $137, only increasing its dividend by 1%, but that makes a huge difference in the long term. If you were to invest $10,000 into McDonald's, that would give you 72 shares at a price of $37, giving you an income of $360 a year. If you were to spend that $10,000 at the moment at $190, you'd get 52 shares, giving you a total income of $260. That is a difference of $100. $100 does not sound like a lot, but when you start reinvesting that $100 over 20 years, it makes a huge difference. After 20 years, you'll have a total investment of $21,911, with your initial investment of $137. This does not take into account Mac is increasing their dividends, because this will also increase the total amount of money you earned. With investing at $190, you'll end up with a total value of $18,061, and a difference of almost $4,000. You don't have to invest $10,000. I was just using that as an example. You could do $1,000 or even $100. As you can see, McDonald's has dropped $3 today, and this is a trend across the whole stock market. This could be the start of the new crash, and I'd just like to remind everyone that's viewing this video not to panic and to make decisions that are smart and emotionless. Coke has only got to drop another $7 to get below its previous crash price. The stock, I think, is undervalued compared to the rest of the stock market. I think easily this company could drop below the first amount crash price of $37, but we'll have to wait and see. This brings us to the end of the video. If you'd like to learn more on how to get the most value for your money, please comment that down below. If you enjoyed this video, please share and smash that like button. I'd greatly appreciate that. And if you haven't already, please subscribe, and I can keep you up to date in what is happening in the stock market. Thanks for watching, and I'll catch you next time.